Not really. News has no indication of that. But what it will do is it'll let you know if the market may become untradeable. And typically, when I say untradeable, I just mean too fast to make good decisions. That's what happens sometimes when news is released. So that's a part of my everyday, guys. Forexfactory.com. Um, then everything that I talk about, as usual, will come from the Nexgen page. Really, no secrets. Trading guide is going to have all the answers that you need. It's going to have everything that you need. It is going to have the rules, the pictures of the rules, the trading plans, all your resources. I mean, anything and everything that you could need, you're going to find from right here. But I'm going to go one further, and I'm going to give you everything that you need this morning. And I'm going to do it with what we call a high probability trend trade, guys. A high probability trend trade is a trade that typically wins more than it loses. It's a trade that creates confidence because that win percentage is higher than the lose percentage. But most importantly, guys, it's the trade that's going to teach you to read your indicators, because it's mandatory to read your indicators to know whether or not your pattern is being displayed, to know whether or not your rules are true. Good morning, Steve. And that's really all we're doing is we're reading our indicators and we're saying, do I have the edge? Do I have an advantage? Is this a pattern that I can study, that I can test, that I can prove wins more than it loses? And if it is, guess what? It's time to enter the market. And if it's not, well, it's time to sit on your hands and do nothing. And 90% of your day, guys, 90% of your day is going to be doing nothing. 90% of your day is going to be pausing and waiting and looking for these advantages. And then when they're true, that's when you're going to enter the market. Hey, good morning, Bejoy. Once you guys get to the point to where you can look at your indicators and recognize three very simple advantages, you're going to understand three very important concepts. You're going to understand first where the market is likely to continue. This becomes entries for the highest probability trend trade ever. This is how you're going to get in. This is where you're going to get in. This is the point where you're going to have the least amount of risk and the highest profit potential. You're also going to understand where the market is likely to go. This is going to be a management tool for you. This is going to give you the ability to look at key areas and say, man, with all of these advantages, that's the most likely spot for the market to arrive. What a great place to put my target. And then finally, you're going to understand where the market shouldn't go. And golly, where the market shouldn't go, guys, it's called a termination condition. And a termination condition has the ability to stop the market, to reverse the market, to take a market that has been pushing like a wild banshee and then just stop it cold. And you're going to know about these areas long before you ever get to them. And you're going to be able to understand all this stuff, when it's time to enter, when it's time to sit still, where it's likely to continue, likely to go, likely to stop. And you're going to do it with only three rules. That's right, only three rules. But wait, there's more. Three rules, guys. Each rule, when true, creates an advantage. So I've got 1, 2, 3 rules. I've got 1, 2, 3 advantages. And the recipe for a trade, brand new users, is momentum via rule number 1, plus a clear path from rule number 2, and then defining your entry area with rule number 3. These three rules are going to be your first trade, guys. And momentum and clear path, once you recognize these two, you've got a foundation that is unshakable. You've got the ability to create your own plan, to recognize advantages, to find ways to capitalize just through momentum and path, guys. And once you understand these two, you're just going to start adding entries. You're going to start adding entries that make sense. But in the beginning, we're going to keep it focused on a high probability trend trade. It only takes 2 charts to make it happen. And I changed this picture to give you guys an idea of the refinement process. So your large chart is a very slow moving chart. It's a broad stroke of a brush. It's the overall opinion of the market. And it takes one bar, the first bar, the most current bar. This will define direction, momentum, and areas. Rules 1 and 2 must be met on that large chart, guys. The large chart leads the way. Inside of this one bar are all of these bars. This is your small chart. This is your entry chart. This is where rule number 3 is going to have you pinpointing where the market is most likely to continue. By using the smaller, faster chart, by using this refinement process, you guys will be able to reduce risk. You'll be able to maximize profit potential. Rule number 3, excuse me, is specific to a trend trade. Rule number 3 is your first entry using that refinement chart. We're using these two charts because they're kind of a reflection of who you're trading with or who you're trading against. The large chart you should think of as a large crowd. It's just a metaphor. And that large crowd typically wins. That large crowd creates trends. That large crowd establishes momentum. That large crowd reacts at areas. There's just no reason to ever fight them. Your small chart's like a small crowd, a bunch of ne'er-do-wellers, hoodlums, if you will. And they love to fight the large crowd. And they create what's called a retracement. And a retracement is a small move counter to the underlying trend, which means when everything is going up, your retracement will be going down. And when everything's going down, your retracement will be up, guys. We wait for, insist on, and capitalize upon these retracements. That's how you're pinpointing your entry using that refinement chart. The next 45 minutes will be spent learning the trigger line and Fibonacci rules for when it's okay to trade. And I'm going to say it again. It's okay to trade when your rules are met. It's okay to trade when you have the edge, the advantage, when your indicators are telling you that everything is going your way. It's okay not to trade when those advantages aren't present. It's okay not to trade if you don't have momentum, if you don't have a clear path, if you can't define your area. Everybody in the room has the ability to simulate. All of you should be able to take a picture. If you can't, we need to have a conversation. Let me teach you. You should be able to annotate a chart. And then that takes you to the first step in becoming a confident trader ASAP. When you take a trade, post it in the room. Drop it in the room for feedback, guys. Post your pictures of your winners. Post the pictures of your losers. Post the pictures of your questions. If you're looking at a chart and you can't for the life of you figure out what's going on, all you have to do is take a picture of it, drop it in the room, say, hey, Mark, what is this? Every time you post in the room, it's a private session with me. So what I ask is you come to your private session prepared. You tell me what you see on that chart, and I'm going to encourage you guys, every time you take a trade, I don't care if you win, if you lose, if you broke rules, if you followed rules, write these rules on the chart. Write strong triggers. Write clear path. Write entry. And show me what you saw. And tell me why you did what you did. So if you post a chart in the room and you say, I had momentum, but you didn't, well, we'll talk about it. And we'll make sure that you understand how to identify momentum. If you tell me your path was clear, but it wasn't, we'll do the same. And the same is true for entries. We'll also look at entries and talk about whether or not you could have had a little lower risk or maybe a little more profits in it. So every time you post in the room, guys, it's a private session. Take advantage of that. That's one of the reasons the education is so effective. It's the ability to get feedback on everything you do, to know what you did right or wrong every time you enter the market. We're going to simplify. We're going to break it down to 2 trades on a plan I'm going to give you. The plan is called the KISS plan, and it's designed to optimize your chances of success with this trade and with what we call a medium probability trade. Those are the 2 trades. Your job is to understand what looks you're going to commit to learn these looks so that they become easy. And that is where I'm a firm believer that repetition creates recognition, guys. If you take a picture of something 25 times, and you write what that picture means to you. These are strong triggers. This is how I identified them. This is rule number 1 met. Guys, you're going to fill out this strong trigger section on your own. Same with the clear path, same with the entry. You're going to show yourself exactly what the market is going to look like when your patterns are true. You're also going to take pictures of weak triggers and those termination conditions. You're going to say, these are my red flags. These are when I need to sit on my hands and do nothing. This is what it looks like when my advantage isn't present. So this first tab is going to help you create recognition of the very basic core rules individually so that you can ultimately piece them together to create a trade. The second tab is the client trades, guys, and this is just like 500 pictures for you to study, to see these patterns, the recognition of advantages. And I think the best thing about these is this is all Nexgen users. This isn't me going back and handpicking pictures. These are all taken from you guys in the classroom, showing me what you're doing with the software. So if you're evaluating the software, you're going to see an awful lot of people finding an awful lot of success following rules. There's a place for you to put your pictures as you build a trading plan. And then finally, there's a trade tracking sheet, guys. And this is where you're going to put your trades. I took a long trade. I took a short trade. I'm going to drop it in the picture section. I'm going to talk about momentum and path, because what you're going to find is that the more often you can put a yes in momentum, the more often you can put a yes in clear path, the more often you're going to find yourself winning trades. Momentum and path, guys, it's the core. And then most importantly, there's the feedback from class section. So each and every morning, and I still do this, guys, and I've been reading indicators for a long time. Good morning, Cav. Every morning, I wake up and I take 3 to 5 minutes, guys, and I look at what I did yesterday. Whether you're putting them in the spreadsheet, I hope you're using the spreadsheet. And I look at them and I ask myself these two very important questions. I say, hey, what worked? Excuse me, my lungs are struggling today. And I also ask myself, what didn't work? Because what worked is what I want to repeat. And when I go through this process every morning, I'm setting myself up to repeat the things that are bringing me success. And if I take the time to identify what didn't work, and more importantly, identify through the feedback why it didn't work. What did I do that gave up my advantage? What did I do that may have cost me success? Guys, by going through that each and every morning, I'm focused on the winning patterns. I'm focused on avoiding the losing patterns. I'm going to feel relaxed when my rules are met. I'm just going to feel forced. It's going to be nervous if I'm breaking rules. And you'll find that. You'll get agitated. You'll move stops when you know you're breaking your rules. So that little feedback, that little self-awareness, using the spreadsheet, using the trade tracking every morning, it will increase and accelerate the education process for you. So we're going to learn rules. You guys are going to practice and flood my room with pictures. We're going to keep it simple today, guys. We're going to keep it focused on 3 rules on 2 charts. I will give you a plan by the end of this first hour. I will have given you everything that you need to be successful with the software. Everything with the exception of the repetition for it to be easy, guys. That's on you. I'm going to give you the world's greatest set of tools. You are going to have to, yep, there I go. Thursday morning, Gary. You're going to have to take the pictures. You're going to have to get the feedback. You're going to have to repeat the steps until they become pretty simple for you. Let's start on the large chart, the big chart. Large chart leads the way. Large chart sets the tone. Large chart is the reason we look for an entry. And it has to have strong triggers first, guys. And strong triggers give us the advantage of momentum. To identify strong triggers, you must be trading with the trend. So large chart behind that first bar, if the background is green, the trend is up. If it's red, it's down. The only way you can have strong triggers, guys, is if the trigger colors match the color of the background. So in an uptrend, small triggers up and above the large triggers wide, space between the two. Guys, that's your strong trigger look. And when you have strong triggers, the odds are favorable for the market to continue up. In a downtrend, small triggers below the large triggers are wide, space between the two. That's your strong triggers. And when you have strong triggers, the odds are favorable for the market to continue down. Odds favorable momentum. That is the advantage, guys. Odds favorable. I love that, those two words together. When you have strong triggers, the trend is more likely to push in the direction. When you have strong triggers, it gives areas the potential to break. When you have strong triggers, you're buying and selling Fibonacci support and resistance on that smaller, faster chart. And guys, when you have strong triggers, it can cover some of the mistakes you make as a new user. When the small triggers work inside of the large triggers, this is weakness, the opposite of strong. The advantage is gone. And when you have weakness, anything can happen up or down. So what we're going to do is we're going to equate a look, separation between the triggers, with an advantage, odds favorable momentum. And we're going to equate the look, smalls inside of the large, with a disadvantage, anything can happen. And create that correlation so every time you go to a live market, you can say to yourself, well, my smalls are inside. My advantage isn't huge. And look at the little retracement that we're getting there. And you can scroll back, and the market's been a little wonky today. Weakness in the triggers, bigger retracement. Well, those are areas affecting it. Weak triggers, there's your retracement. Weak triggers, there's your retracement. Strong triggers, there's your market, your areas breaking. So strength happens when the colors match and the separation is present. The advantage goes away when they return. Guys, this is a great picture showing you that momentum isn't an always thing. Momentum is very much, it is fleeting, it's in the moment, it pushes. These tails are potential entries anytime there's odds favorable momentum. And then the opposite of strong is weak, guys. When the smalls are inside, 4 out of 5 pivots come with weak triggers. So it's a pretty simple recipe. I think it's the fewest amount of pictures I use to teach something. Is everybody good with strong triggers, guys? There has to be separation in order for there to be strength. And when there is strength, that first advantage is on the table. Once it's there, and only when it's there, will you look for the second rule to be met, making sure that there's no termination conditions, making sure that there's no areas that could stop the market. Areas on a large chart are where the large crowd are making decisions, guys. It can be divergence, highs and lows. It can be Fibonacci support or resistance. It can be yellow one-to-ones. And I want you to think of these areas on the large chart. This is where the people that control the market are most likely to enter and exit. This is where they're most likely to fight. This is where they're most likely to create bounces. So in order to define a termination condition, we're going to let that large crowd get to the area. And that's the first step in defining a termination condition. Price reaches an area. Price bars reach Fibonacci resistance. Price reaches Fibonacci support. Once price reaches the area, we're done with price. We don't need it anymore. Your trigger lines are going to tell you everything you need to know about that area. So if price reaches resistance and the triggers remain below, or price reaches support and the triggers remain above, guys, those are termination conditions. That's exactly what it looks like. 2 at a top, 1 at a bottom. And when you have a termination condition, the likelihood of the market continuing through that area goes down dramatically. Your advantage is no longer in play. Your path is not clear. Absolutely no trades into the area or what the rules say. Excuse me. Price reaches resistance, triggers below, no trades into the area. Price reaches support, triggers above, no trades into the area. That's how you define a termination condition. You'll be able to define a clear path by trigger location versus the area, guys. When the small triggers and the large triggers get above resistance, resistance is broken. This is what we call a breakout, when the triggers break through, when the area actually breaks, guys. There's your clear path, and it remains clear until you reach resistance. You can also get that clear path from a reversal. First, it's a termination. If your triggers reverse and everything's going down, you haven't reached support, your path is clear. Guys, the easiest trades you will ever take are trading away from Fibonacci areas with momentum and trying to carry that trade to Fibonacci areas. Trading away from Fibonacci resistance, finding that entry on the refinement chart, trading to Fibonacci support. And the easiest money happens in between fibs with momentum. Is everybody good? It's either a clear path or it's a termination condition. Let it be that black and white. And then there's one more termination condition that you'll see on a smaller, faster chart. This one really takes advantage of that refinement process, and being able to see that the market is slowing down, being able to see that change is coming. And you're going to see that with three divergences, guys. Three divergences on the same price range can stop a market. Three divergences in the same price range can create an untradeable bounce. Three divergences on the small chart is showing you change that you can't see on the large chart. If you see three divergences on the large chart, the market typically moves further the other direction. So when the rules are met, this is the only termination condition on a small chart. So let's open up a live chart and let's just go through and see if we can find a couple rules being met. Separation is strength. Strength is amazing, but termination conditions can stop it or create an untradeable bounce. When support breaks, it behaves as, or when resistance breaks, it behaves as support. You see it a couple times. Weak triggers can create deeper retracements. Guys, there's pretty much all the lessons right there. Price reaches a divergence low, triggers stay above. There's your termination condition. Also 1, 2, 3 divergences in the same price range. And sure enough, that's where the bottom was put in, guys. All of these patterns repeat themselves. All of these patterns can be seen every day. All of these patterns are part of what it takes to create the high probability trend trade. So large chart leads the way, and you have momentum. Large chart leads the way, and you're going to have a clear path. You have those two advantages that are more likely to create winners than losers. Let's go define an entry, guys. And entries are very precise. Entries are so precise that you're going to use a limit order to buy or sell a pullback. That's that little retracement, that fight from the small crowd. And you're going to do it at areas, at a fib, at a midband, or a yellow 1-to-1. And you're going to do it in an area because areas on the small chart, that fast chart, can create a bounce with the trend the same way areas on a large chart can create a bounce against the trend. But here's the deal. We want those areas to be inside of triggers, guys. Triggers are going to have a role in the entry, and they're going to define where that retracement is most likely to go. So when the rules are met on the large chart, when I have strong triggers, when there's no termination conditions present, excuse me, it takes one bar to know the rules are met. Inside of this bar, we're going to use the refinement, guys. And it begins with a reversal bar. The reversal bar begins the pullback, this first up bar after all of those down bars. And this reversal bar says, hey, the fight is on. The retracement is imminent. Here we go. You're going to allow your large and synthetic triggers, smooth and step. These are just large triggers from the small chart, and these are the large triggers from the large chart. You're going to let those define where the retracement is most likely to go. Somewhere from the bottom line of those triggers to the top line of those triggers. You don't know where, but you know that it's possible to get to that top line. And then you're going to define your areas inside of that retracement zone. Fibs, midbands, or yellow 1-to-1s. These areas, this midband, this fib, these 1-to-1s, these are all the areas that could stop the forward progress of that retracement. These are the areas where the market is most likely to continue with the momentum and path from the large chart, guys. Your job is going to be to activate a limit order and get into that market just below the areas inside of triggers. So once again, let's go through it. When the rules are met on the large chart, everything is going to say down on this chart. The momentum is going to be strong on this chart. And you're going to say to yourself, oh no, they're going without me. And then the reversal bar prints, and the reversal bar starts the pullback. It begins the retracement. And that retracement is most likely to go somewhere from the bottom of the triggers to the top of the triggers. So the reversal bar is not your entry. That's a loss of momentum to start the retracement. The trigger lines are not your entry. They're just used to define where that retracement is most likely to go. You're going to identify areas inside of triggers. You're going to look for fibs, for midbands, for yellow 1-to-1s. Any area in that retracement zone, the lowest area closest to the reversal bar, you're going to activate a limit order 2 ticks below it. And you're going to say to yourself, I hope the small crowd pushes to my entry, because if they do, I've pinpointed where the market is most likely to continue in the direction of the trend. By defining the retracement zone, by defining the areas where the market is most likely to bounce, you're also defining where you don't want the market to go. You don't want the market to go past that retracement zone. You don't want the market to blow through those areas inside of those triggers. If they do, the advantage of rule number 3 is gone. Once you get to the other side of those triggers, the advantage is gone, and absolutely no areas beyond the triggers, what I call the wrong side of the triggers, are a part of the entry equation. In an uptrend, thank you futures, we can make it both ways. Reversal bar begins the pullback, not the entry. Trigger lines define the retracement zone, not the entry. Areas inside of triggers define where the market is most likely to bounce. This one has multiple areas. It creates a window. I like to call it the window of opportunity. Your limit order will go just above the highest point of support, the area closest to the reversal bar. This is where you're going to get in. This is where you're hoping for the bounce, guys. Anything on the wrong side of the triggers, anything beyond the retracement zone, the area is most likely to create a bounce. That's where the advantage of rule number 3 is no longer in play. This is not where you want to enter the market, guys. These are outside of your window. And by defining where the market is most likely to continue with some pretty simple rules, you're also defining where the market should not go. Your initial stops for a high probability trend trade will be placed where the market should not go. Generally 4 to 5 ticks above the trigger lines, guys. Because if the market can push up through everything that's most likely to stop it, your advantage is gone. And that's why you exit a trade. And I'm going to tell you right now, any trade that typically wins 70 to 80% of the time, math dictates that it must lose 20 to 30% of the time. Which means losing is a normal part of trading, guys. Losing is a normal part of a positive equity curve. But what you can do is control whether you're taking acceptable losses with all the advantages present, or if you're taking avoidable losses when you begin to forfeit the advantages that create a high probability trade. Your job for the first 20 days with Nexgen is going to be to go through it and learn momentum, because once you have momentum down, you have a market where the odds are favorable for it to continue in the direction of the trend. And then with momentum, you're going to couple the clear path. You're going to make sure price hasn't reached an area, that triggers are breaking the areas previous. And once you have this, look, guys, the market's trading way up here. You're going to wait for that reversal bar, but not enter on the reversal bar. You're going to define the areas inside of triggers. This becomes your entry. You can go back and study this pattern. And all this is a pattern, guys. It's a pattern that repeats itself. You can study this pattern by scrolling back historically on your large chart. If on my large chart, and crude oil's been a little crazy, I have momentum and I have path. You're going to see these tails form, guys. And you can go back and you can circle these tails. If the rules are met on the large chart and you circle a tail, and those tails, those circles line up with areas inside of triggers on the small chart, that's your pattern. I want to see if maybe S&P has some. That's a pretty good look. Odds favorable momentum, nothing in the way. And if you scroll back, it just dances off the midband and the retracement zone. Guys, do you see it? That's your pattern. This is the same pattern going the other direction. Small's above the large, and there it is again, dancing right off of a midband, right inside of the retracement zone. Those two trades took place during the chaos of news. Look, if you look at the timestamp on my small chart, news started at 8:30. Everything from there to the end of this, This was a 24-second rampage, guys. Rules meant for a long, rules meant for a short inside of that chaos, because it's just patterns. The market doesn't know it's news. It just moves too fast for us to catch a move. Are there any questions, guys? That's your high probability trend trade. That's how you're going to study it. That's how you're going to prove that it's effective. That's how you're going to develop trust. Pictures that you take are going to get you where you want to be faster. I'm going to give you all the goodies that I have for you right now. This is Chart Reading 101, and Chart Reading 101 is just you taking pictures of those two advantages, momentum and path, annotating the charts, why they are momentum and path, dropping them into your spreadsheet, committing these looks to memory, guys. And if you do that, if you go through this process, 25 strong triggers, you're never going to make the mistake of the difference between strength and weakness. You may choose to avoid strength, but it won't be on accident. And if you study a clear path and a termination condition, the same is true. So as you go through and you start taking these pictures, I'm also giving you the high probability trend trade checklist. And this is going to help you understand what it looks like to have these advantages. It's going to help you take those pictures. This checklist is the best of the best, highest probability way you could ever take a trend trade. And it starts with what we call a strong top or bottom. One of the things that may happen from a termination condition, price reaches an area, no triggers get through, is that the market may reverse. Those large triggers may pinch, they may roll, go from green to red. When a termination creates that reversal, we call it a strong top. And when that termination creates a reversal, we call it a strong bottom. And while it's not a rule for the high probability trend trade, a strong top or bottom sets you up for the highest probability trend trade. A strong top or bottom is rule number one for the second trade on the plan that I'm going to give you. A strong top or bottom is rule number one for an HVA trade. A strong top or bottom is rule number one for a momentum trade. So strong tops and bottoms, if you allow them to lead the way, they're going to set you up for the highest probability trade. And then the checklist is making sure that you have strength in the direction of the trend and you're avoiding weakness. And the checklist is going to have you asking yourself, am I trading directly into a termination condition? That's not the right thing to do. If it's present, wait for the reaction. Did my triggers clear the area? Is my path clear? If so, let's go and look for an entry. And guys, this middle look that's on this page is what we call a 50-50 look. And this is the transition between termination and clear path. And as long as the momentum is present, if 50% of your triggers make it through the area and 50% do not, this area has the potential to break. And there's a lot of opportunity to be had on the potential to break. But it's not a high probability scenario. So your job is to insist on the clear path initially. And then define your entry, understanding where the market is most likely to continue. This breaks it down all the way to where your limit order goes. The second page is just the checklist without the pictures. You can print this out, put it on your desktop. And I'm going to tell you guys, nobody in the history of the checklist has ever been able to follow it truthfully and do worse than 70% winners. I would encourage you to try. I would hope that you would do your due diligence, that you would do your study, that you would follow this checklist both historically and live, and try to prove that it doesn't win up to 70% of the time. Because if you do that, you're going to develop trust. And trust is what puts you in the position to take that entry no matter what your gut says, because you know the pattern is proven. And that's where the KISS plan comes in. The KISS plan, this is the one that keeps you focused. The KISS plan is designed to optimize your chances of success with a high probability trend trade. Through simulation study, class feedback, continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, once you can read your charts, you'll probably develop your own plan. Until you can read your charts, this is a plan that's been proven to win more than it loses. This is a plan that's gotten people funded in those prop firms in their first 30 days with Nexgen. So one of the things that I like to tell people is there's two things you have to know before you sit down and not trade on sim. When you're on simulator, guys, I don't want you to have any fear. If you're fearful on simulator, you're going to get decimated in the live market. You've got to simulate until you develop that confidence, until you develop that trust. And you have to know why you're going to enter a trade, guys. And the simple rules, because my rules are met. Because my rules describe a pattern, and that pattern has been studied, it's been back tested, it's been validated, verified, and proven to win more than it loses. So if my rules are met, there's no reason not to enter the market. I know I'm going to win more than I lose if I'm following the process, which means that every time I enter the market with my rules met, I don't know if I'll win or lose, but I'll know that I'm more likely to win, which really helps remove the emotions of trading, because you go into every trade accepting that it may not work, and you go into every trade understanding that it's more likely to work. You also have to know why you're going to exit. This is management. Exits are taken either at profit targets, whether it's a predetermined dollar amount or whether it's a key area, or when the advantages that had you enter the trade go away. So the first example would be putting your initial stop 4 to 5 ticks beyond the triggers, because that's where the advantage of rule number 3 is no longer in play. Or seeing 3 divergences print on that smaller, faster chart, because that's where the advantage of a clear path is no longer in play. So you need to know why you're going to enter, and you need to know why you're going to exit, guys. And when you have a written plan defining both, defining your perfect entry where the advantages are true, and when you have a management plan defining the exit conditions that'll have you exit the market, guys, a written plan is tantamount. It's so important. There's no such thing as a mental plan, as a mental trading plan, guys. Have it written, have it repeatable, and commit to adherence. Once you're in, you've got to manage. Management's what scares most people, and it's interesting. We'll all pull the trigger willy-nilly. We'll get into every trade we could ever come into. Couldn't care less. But management is where people pucker, guys. So in the beginning, as you're learning to read your indicators, as you're learning to trust these advantages, let your management be just as mechanical as your entries. Let it be if-then. So the management plan on the KISS plan is designed to understand stop placement and learn to trust it, but it's also designed to get you okay with the idea that it's all right to get paid, that it's okay to capture funds, that every trade doesn't have to be a home run, guys. So you're going to create your own plan based on your ability reading the indicators. There's no doubt in my mind. But until you can do that, it's okay to follow the KISS plan. And the KISS plan is very dependent on you being able to enter in the correct spot where the market is most likely to continue. So if your entry is 2 ticks below resistance inside of triggers, then your initial stop is 4 to 5 ticks beyond the triggers, guys. And that's where the market should not go. And you're going to know your risk before the trade is ever entered. So if I enter at 34, my stop is at 49. That's where the market shouldn't go. I have $150 per contract of risk, and I have to accept that. I have to accept that trading involves risk. I understand exactly where the risk is most appropriate. And if I try to reduce my risk, if I try to beat the system and put a stop anywhere in that retracement zone, anywhere near areas likely to create a bounce, I am more likely to get stopped out of my trade, even if it goes and does everything my indicators say it was going to do. Your targets are predefined at $100 and $200. If you don't get stopped out, and you will, probably 20 to 30% of the time, this is going to be your first stop movement, guys. If a reversal bar prints in the direction of your trade, you're going to redefine where the market should not go, because now the market is confirming direction, momentum, path, entry, everything's going the way you want it to. So your new stop is going to be 2 ticks above that reversal bar. Your $150 per contract risk has just been reduced to 30. And once again, there's nothing to do. You're either going to get stopped out for a smaller loss, or the market's going to go to your first target at $100. And if it makes your first target, guys, that first contract is automatically pulled off. You've only got one remaining. Those funds go into your account, and this is a win. And this is you getting paid $100, and this is $100 that they're not pulling out of that account. It's yours, and guys, that feels good. And you're going to go to break even. You're going to move your stop to a 0 risk level so that you can learn to trust the idea that with that large chart momentum and path, the market's more likely to go down than up. But your second target's only $200 in the distance, guys, and that's not a long stretch with all these advantages. And if price reaches your second target, you're gonna get out. That's it. It's over. No more. But that's a $300 trade, guys, and $300 is a 3-minute investment of your time. As far as actively trading, $300 once a day for 252 trading days a year is a $75,000 year. You're gonna see the opportunity. You're gonna see the potential to double or triple that pretty easily once you get good at following rules. Once you get to the point to where you accept that you don't have to be in every move to be a successful trader. You don't have to take every trade. You don't have to hold for the longest duration. You don't have to be the first one in, guys. Your job as a trader is to figure out how to get paid consistently with the most accuracy, with the least amount of drawdown, how to win more than you lose, guys. And that's exactly what we've just talked about for the entire first hour is nothing more than really getting into the market, finding the best of the best. So I'm going to give you 2 things right now in the chat box. Please download them, get them on your computer, use them as a study tool. The first thing is the spreadsheet. I'm giving you my spreadsheet, and it's a trade tracking sheet. It's over 500 pictures. It's a place to build your plan. It's the basic rules. Also, I'm going to give you a zip file called All You Need. And you're going to have to extract this to a folder. So drag it over, download it, extract it to a folder. But inside of there is that chart reading 101, being able to look at your indicators to understand those advantages. Inside of there is the PowerPoint that I used to teach each and every day. It's that high probability trend trade checklist for you to not only have the cheat sheet on the pictures, but also something to put on your desktop to hold yourself accountable. The KISS plan is in there, the Keep It Simple plan for that highest probability trend trade, and then also opening the door for you and giving you entry and management rules for the 50-50 trade, for that potential to break trade. You're also going to have in there a document called Daily Goals, and this reminds you that you don't have to hit home runs to be successful long term. Your job is to get paid consistently each and every day. As you guys begin to grow and you start to create your own management, this one is called exit conditions. And why name your trades? And every trade has a name, guys, whether it's a trend trade, an HVA trade, a momentum trade. And the reason you're doing this is because when you name your trade, you know the exact rules for entry, and you should know the exact management plan every time you get into the trade. Each trade is managed differently. Each trade has different entry and exit rules. This is something to help you grow a plan beyond the basics. There's my favorite one, the pictures you can take, guys. And before I even show you the pictures you can take, I want to show you my trade or my picture count for 2025. I am 4 pictures short of 3,000 pictures in 2025. There's a reason I can read my indicators well. And it's because I take pictures before I ever enter, making sure I'm going to go back and study this. I'm not even going to annotate it. I'm just going to go back and look and make sure I didn't miss something. I take pictures during the trade so I can create a management plan. I take pictures after the trade, start to finish, entry to exit, so I can go through. I'm going to annotate it. I'm going to talk about my advantages and why I did what I did. And then I also take pictures when my rules aren't met. I take pictures when I see termination conditions. I take pictures when there's no entry. I take pictures even when there's no momentum and I'm just bored, because I don't lose money taking pictures. I lose money taking wrong trades. Pictures 3 and 4, after the trade and the no trades, these are the ones to put in the room, guys. These are the ones to drop in to say, hey, Mark, here's what I saw, here's what I did, here's how it turned out, what do you think? So take a lot of pictures. And then finally inside of there is the Trend Trade Simple, guys. This is everything that we just talked about. This is how I teach, what I teach, the advantages I teach, how to recognize those advantages, all the way down to how to study them. How many hours do I trade on day and average? Morgan, I would say on the average day, I don't spend more than 20 minutes in the market. I watch it a couple hours before class typically. And usually I'll watch it a couple hours after, maybe 4 hours, sometimes 5 if I'm bored, 6. One of the things that I know is that after 11 or 12 hours, nobody's good. Nobody makes good decisions. When you've been sitting in front of a market and it's not giving you your rules met, when you're sitting in front of a market and you can't trade into a termination, and you can't trade into a termination, and you don't have momentum, and Morgan, if you just sit here, you'll talk yourself into some stuff. You'll talk yourself into some trades that aren't the best trades because you get bored. The most successful traders I've ever met in my life are the traders that can do absolutely nothing. The traders that can sit on their hands and say, I don't care. I don't care if I'm in the market, if my rules aren't met. It doesn't matter to me. Because the reality is, if I'm just a little patient, I'll probably find a way to get in. If I'm just a little patient, I'll find a way to get paid. And there's mornings, Morgan, where I take 2 hours before class and don't take a trade. And there's mornings where I might get 5 or 6. And it just depends. It just depends. And I think that not creating expectations, right? I don't have expectations of the market to give me 5 or 6 trades. People tell me that a lot. Oh, I'll only take 4 trades. That's asinine to me. How about I'll take every trade where my rules are met, and I'll avoid every trade where they're not. And that should be the goal, guys. The goal should be to enter the market because you have an advantage, and that advantage is defined and it's clear, and to exit the market when that advantage is gone. And it's really it's really amazing how simple it can be, I think, personally. So are there any questions? Any questions about momentum? Any questions about defining a termination? There's a beautiful one. Price reached resistance even with momentum. Guys, it made it 1 tick above that red fib, and now it's heading down. I've got 3 divergences in the same price range as well. Large chart and small chart say, hey, guess what? We may have a top end. Let's go look for some opportunities the other direction, perhaps. Any questions about taking pictures? Any questions about posting in the spreadsheet? You guys are good? All right, I'm going to start clicking on your pictures then. Pete gets us going. Andy, when you give me pictures, before Pete's, when you give me pictures, try not to show me like this in your face, right? These are, I can't even see everything, so I can't see the top. I can't see whether you're on candles or the Hakshi, Reishi, whatever they call it. Andy, if you want to give me a big picture of your trading view, if you want to give me this full picture, show me whether you're on candles or not, break it down a little bit. Man, my trend trade worked. Show me the full picture and I can help you understanding what it is you're looking at with the 2. And then Pete, termination condition. I like that you say it bounced off the mid-band. You didn't notice the fibs or the 1-to-1s that stopped it as well with all the triggers below. Everything says down. The market is cranking. You don't have the best momentum, but every indicator says down. Large chart has a clear path. And Pete says, let me get past things that can create a bounce and see if I can ride that down. Really nice trade, Pete. Once you have momentum and path, you're going to find a way. There it is again with the potential to break in a couple divergences. Pete says, you know what? That's not my best trend trade look. Let me wait for everything to agree and ride it down again. So that's twice I've said, let me wait for everything to agree and see what happens. And then there's 1, 2, 3, 4 divergences in the same price range. Odds favorable momentum. And Pete's trading directly into a termination condition. Does everybody see it? Right into a termination condition. And Pete makes a choice. Pete says, you know what? I've got a really strong bottom. I've got amazing amazing momentum. I've got strong triggers, no divergence, virtually no risk at the bottom of the window. I'll see if it bounces. And you'll notice that he doesn't hold and hope. He gets in, he gets paid quickly. Low probability trade into a termination. Even lower probability from the wrong side of the triggers. Pete made a choice and managed assertively because he let his recognition of advantages or disadvantages dictate how he manages. Gino, virtually impossible to see what's going on or know what's going on or give feedback. I don't even think he's in the room anymore. All I see is smalls below the large, taking an entry, looks like from the wrong side of the large and small from a termination, and it works out. And I am going to just go out on a limb and say Gino had reasons to take it, but I don't see any of them on the chart. Guys, remember, tell me what you see. Tell me why you're doing what you're doing. All right, Todd. 5, 1, 13, 2. So your first long with weakness. And man, your ins and outs are weird over here, Todd. Crazy looking. So you're in at 54.25. That's okay. Weakness, and it looks like you get stopped out. And then everything says up. And let's talk about this center trade, because this is a great lesson for you. And I don't disagree. Large charts up, large charts moving, every indicator agrees, and you just jump into the market. Is that a fair assessment? Just jump the fudge in, hoping it goes up. Right, cool. I'm not mad at you, Todd, but let me show you something. When you're left of these small triggers, that market's going to go up. As soon as you get a close on the wrong side of those triggers, that market's most likely to retrace. So if you just jump the fudge in, that reversal bar, that close on the wrong side of the small triggers, that's your exit condition. And here you did it again. Everything says up. You jump the fudge in. And with true momentum and clear path, it's pretty easy to make some money. Do you see that? No momentum, hard to gain traction. No momentum, hard to gain traction. With true momentum and nothing in the way, that's your easy one. So the mental note you should have, hard without momentum. Wrong side of triggers, no momentum. It's hard. And then this one right here, easy peasy lemon squeezy. Momentum and path. And Todd, greatest lesson I could ever give you. You can struggle hoping the market goes up, or you can let the market tell you that it's going to be hard to stop that upward movement. And this is You're 90%, right? You were in the den. I don't know what that means. This is your 90%. This is where it's okay to do nothing. Hopium den. I like it. And then that's the one. This is your 10%. This is the easy money. Does that make sense, everybody? When you have momentum and path, if you're just going to jump in, if you're not going to take that trend trade, insist that it's great. Good stuff, Todd. Thank you for posting. Even these mistakes, right? Take the time to annotate them. Even the mistakes, take the time to annotate them. Take the time to talk about what went wrong. Take the time to talk about how you're going to be patient next time. You'll be amazed at how the annotations you put on a chart from a loser pay dividends later on during the day. And then Andy. Man, losers are all about it. I love losers. Andy, weak bottom. You've got momentum waning. You're coming off a fib. Rule number 1 broken. Rule 2 met. Rule 3 is broken. Nope, you're right inside of the triggers, Andy. You didn't break rule number 3. Beautiful entry. But it's not a clear path. You don't have any synthetics over here. So guys, one thing, and let's do a lesson real quick. This fib at 17, it should have been right here. Andy, are you listening? You should have had resistance right there. And you should have known you were trading into a termination condition. Because of your low risk entry, notice how those small triggers are a full bar away. It gives you time to manage, which is nice. But guys, when you look at your large chart, there are 3 time frames. When Nexgen builds a workspace, your large chart has 3 time frames worth of fibs on it, guys. It has fibs on it from the small time frame. It has fibs on it from a higher time frame that you're not even looking at. And then it has fibs from the 13-2 itself. And guys, each of these lines show up on your large chart, and they're equally as important. And I want you to see this. The market stopped on a 21.3 fib. The market bounced at a divergence low. The market stopped at yellow 1-to-1s. The market bounced at a 5-1. And the market bounced right at a 13-2. Every one of these levels is important, guys. Each of these areas are equally important, and they're all capable of stopping the market. So if you see a fib on your small chart that's not on your large chart, know that that would be there in the Nexgen workspace. Andy, you don't have to put them on, but you can say, oh, shoot, dang. There's a fib right here, and I don't have momentum, and this one's probably less likely to win than it is to lose. And you can see how it creates an even bigger push down, right? Creates that big old way down here. Good stuff. Good stuff. Great lessons, guys. Excuse me. Every picture is a great lesson. Every picture is an opportunity to learn in some capacity. You knew the bigger push down was coming. That's amazing, because I have never in my life known what the market was going to do. Ever. I need your magic 8 ball. Best guess. I like it. Lenny. 3 divergences, add a fib, triggers roll, everything's down, and you find a way to grab a little cash. So OFT. What is OFT? Odds favorable termination? Odds favorable trade. Okay. Entered at the retracement. I disagree. You entered on the way down. Should have been at the fib, and next time I'll place it just under the fib. Exited 100 using trailing stop. Got nervous about it. So, okay. So why do you think you should have entered at the fib? Can we talk about it? Or can I just give you my read and you can take it? Trend is up, smalls are up and above the fib, large are up, synthetic are up, large are up, both are above the fib. Here the small triggers are up, right? And your patience is amazing. Large converged with fib. Okay. I want you, do you see how all of this is problematic? So 32 flavors of awesome patience here. All of this is problematic until that third divergence prints. And I don't know, with these triggers up and every indicator up and coming off of an HVA, that I would arbitrarily get into fib. But let's talk about what you did and why I think what you did is so good. Is you let the buyers try one more time and they failed. And you entered on their failure. Because Lenny, it's not the best look. Large and synthetic are still up. They're above the fib. Everything says up on the large chart. These divergences suggest that it may go down. You let them give the last push and then continue down. I love your entry. It's a great patience entry. But you can see all the trouble that you're trading into, right? And it holds when everything is still up. But once it rolls down, that's when it had the chance to break. Guys, this is a great lesson on patience. The difference between hoping a fib holds and letting your small chart tell you that it's most likely to hold. So, Lenny, absolutely nothing but props on this one. I don't know that I would call it an odds favorable trade. Not with all those trigger lines above resistance, with an HVA right there with every indicator up on the large chart. I would call this a great chart read at taking a short stab from a termination condition to see if it actually becomes a top. Nicely done. I like it. And sometimes it's fun just to compare my chart read with your chart read, right? Weak triggers, rule number 1's not met. Joel, I'm not sure what... It's a little... I'm having trouble following your thinking. I have a clear path up, but I don't have momentum. I'm assuming you're crossing out the rules. I can't go down, even though that says down. No areas inside of triggers. Just a whole lot of nothing going on there, huh, Joel? The hurry up and wait, the let's sit still pattern. Costs less money to take a picture than it does to take the wrong trade, doesn't it? All right. No rules met. I love it. All right, Pete. Don't have the momentum on the large chart. Certainly don't have it on the small chart. Difficult to take a momentum trade without momentum. Even more difficult to take. Trying to see. That second one is a shot at the long. I could get on with the shot at the long, but you're still on the wrong side of the triggers. And longs don't work. And Pete's like, I'm just going to stop trying. My small chart says we're likely to go down. And nice recovery. Getting in below the trouble, getting in with the momentum, getting paid. And then when it bounces and turns into a trend trade, great job getting it again. And guys, the P&L doesn't lie. You can take losers and still make money if you're avoiding the wrong losers. Good job, Pete. Cav, price and triggers above the fib. The path is clear. You take the momentum style entry right at the area inside of triggers, and it's pretty easy. I won't be taking any pictures when I'm driving. You know, it's funny, Ron, when we drove to Oregon last time, 5 times on the way, I was like, hey, baby, do you want to drive? And she's like, no, I'm good. Like driving was a treat and not a way to help me not pass out behind the wheel. So I told her, I said, this time you're driving, lady. I'm napping. I'm going to find an audiobook. Great trade, Cav. When everything says up and there's nothing in the way, you guys are going to find a way to capitalize. Everything says up, potential to break. You entered on the push up, Lenny, not the retracement. So the retracement was right to the mid band right there, right? And then you entered halfway into that trend trade, but everything says up, confirmation of the move, and see how every indicator agrees? And it's pretty easy to make money like that, Lenny. Nice job. No, there are no bad entries. It's a late entry. It's not a bad entry. Pretty much, Gary. She's the one when we're 5 miles from the house. Hey, do you want me to drive? That's all right, Andy. I've got people for that. We'll pull over too. We pull over. We'll walk the dog. We'll take some pictures. If there's something worth looking at, we'll look at it. We've seen everything in Texas. We've seen everything on the way to Colorado. But when we get up into Montana, we're going to stop at Bozeman on Saturday. And that's actually her birthday as well. So we're going to stop and have a blast and take pictures and probably eat steak at some point. Because that's what we do. Sorry, vegetarians. Look at that. Everything says up. Snake River Canyon. Yeah, we're going to be just north of that, I think. All right, guys. I'm going to take my first break. Go see if I can find an inhaler. When I come back, Lenny, we'll start with your picture. Guys, that's it for pictures. I need questions. I can't believe in a million years that with 31 people in this room, none of you have a question about something. So post it in the room, guys. Type it in. I'll see you in 5 minutes. Here we go. Man, that's a pretty good move, huh? All right, so we're going to take a look and see what we saw, Lenny G. Everything says down and you go up. So Lenny, I have to ask, why is that a favorable entry area? What about that makes you feel like it's going to beat everything that the large chart says? Is it because it worked? Convergence of reversal and large trigs. Okay. All right. So one thing that I have to ask is how come your large triggers are screaming down here, but your synthetics are going up here? Something's not right with your templates. Because your large triggers, and let me show you what I mean. Your large triggers are half of the entry triggers. So when these are going up here, they're going up here. Which means that when they're screaming down here, you should have had synthetics absolutely screaming down here. Not at all coming together and giving an opportunity. It's a rough look. And actually, that was probably your short right behind your annotations. It's fun to go counter trend, right? It's a good time. It's a good time. So that's 951 on crude oil. And that's 1106. So that was probably yesterday. Right on. So what I would do, Lenny, is I would right click on your small chart and I would go to templates and make sure that you have that 5-1 Renko bar template in there. And see if that changes the look of it a little bit. But I'm not going to tell you how to trade, but I can tell you that fighting the large chart is rarely a path for long-term success. Todd, we already saw this one. You might want to double check and make sure that you clicked on the right link. And then Cav, everything says up and the path is clear. And you take the Nexgen momentum trade, the little smalls break, snap, pop, go. Good stuff. Nice trade. That's all right, Todd. Sometimes it just sticks. Like you go to pop it in, but you don't hit the right, whatchamacallit, the right number. And that's okay. So double check, go back to the picture that you wanted to get done. And you should be good. This is what we call a strong trending market. No worries. Guys, when everything is screaming up, when the small triggers are riding those large triggers, this is odds favorable momentum assumed. Clear path is there. But there's still no real areas, and a lot of people will just keep buying the mid-band until it stops working. Some people will say, I don't know if or where the market's going to stop. Mid-band didn't work there. So kind of hard. No rules met. Everything says up. Man, they're doing great this morning, aren't they? That market is just railing. Everywhere. Every market is up. Gotta love it. DeLuca, how we doing? Jonathan, 0981, Cav, Ron, Vittorio, Muser, Miss Cindy, T46. How we doing, guys? I've got odds favorable momentum on my large chart. I don't have a clear path, only the potential to break. And I don't have any areas inside of favorable large triggers, guys. I've only got one of my high probability trend trade rules met right now, and for me, that's a sit on my hands kind of moment. That is a hurry up and do nothing kind of moment. And there's even divergence on the potential to break, which isn't always the best look. So guys, what would you like to talk about? What's going on in your head? Should have taken a longer break. When the market is rallying like that, you have to be patient. It's caught you many times before. Yeah, Jen, it's exciting, right? Because you're like, oh, the market's going. It's going without me. Dag nabbit. And then there's just, one of the things is, man, when you get in at the beginning, it's great. And once you get to the end, this is something that can happen. And then it does what the ES does, right? Buy the mid-band until it quits working. It worked there. Looks like we had an entry there. And then eventually it just stops working. And it doesn't mean that the up move is over. It means people are taking profits. It means people are fighting. DeLuca, not able to make a message. You mean take a picture? Because you just dropped a message in, which is pretty cool. Lenny. Oop, and Joel, we got one. Oops, sorry, wrong side. Joel, odds favorable, momentum, and you get in on your reversal bar. Perfect for your plan, man. Strong triggers, you let it fail, and then go, and just easy money. Joel, nice trade. Lenny, there we go. Everything says up, strength, and man, beautiful. Uh-oh. Well, I'm glad you got rid of it, DeLuca. Lenny, isn't that easier than fighting? And now your chart looks right too. That's so much easier. Man, we've got to go through that though. Everybody has to go through that. I think that there's some things that people do that are more common than most people understand. Almost everybody fights the large chart at first because they want to be the first one in, because you're like, well, Nexgen has Fibonacci levels, and these Fibonacci levels could be a high or a low, so I'll just, and man, I think everybody's done it. Let's find one where there's more of a stacked kind of. I think the new user goes long here and gets run over and doesn't take the short. and then they go long here and get run over and don't take a short, and then here they go long and they get lucky and they're like, yeah, these fibs rock. And then they go long here and get run over, and long here and get run over, and long here and get run over. And a lot of new users say, I see a blue line, go long. Has anyone other than me done that? Like, that was my whole thing as a brand new user. and part of the thing on this class is to change that thought process where you begin to say, I'll only trade with the trend. And when you do that, it starts to produce more winners. And then you say, I'll only trade with odds favorable momentum. And then you start adding adding even more winners. And then and only with clear path. And you keep finding success, guys, and then you only enter at areas inside of triggers, and you're like, holy crap, trading is so much easier than I made it out to be. And it takes a little bit to do that, guys. You got to go through, and you got to wrestle with stuff, and you've got to practice, and you've got to make mistakes, and most importantly, you've got to have feedback. Jen, you say your fibs are stacked here. Why you waited? Nothing wrong with that. Absolutely nothing wrong with waiting in determination conditions. Some would say that's pretty smart. And they're going to dance here for a little bit, right? You've got the potential to break. You haven't reached 21. You've cleared the one-to-ones, and there's just no areas to trade from. Everything up, you go up with it, and that one just doesn't work, does it? Let's see if we can find a reason why. Not really. Sometimes they just don't work, huh, Joel? Sometimes you can have pretty much the same look, and it just doesn't work. What are you going to do? Great trade, Joel. So let me ask you, when that sets up again, you suppose you'll take it? Yeah, I would too. I think you got a pretty solid plan, man. And I think you're doing well with it, and I think you're consistent with it. And it's a lot of fun to watch. It really is. Which one did you want to show? The one that you just showed me? Or do you have another one that you want to show? Yeah. It happens. And I think this is the thing. And this is a good lesson for newer users. Strong triggers, says up, momentum is there. Let's see what happens, right? Strong triggers, everything says up, momentum is there. Let's see what happens. Here the mid-band didn't create any problem. Here the mid-band area created a bounce. It wasn't even the gap theory. I mean, it's pretty much the same look. It was a 50-50 on your large chart. You waited for your entry conditions. They didn't want to go. The sellers had more in them. It happens. It happens. All right, I'm going to start rambling, guys, because that's fun for me. I want to share this. This was created by a gentleman that started trading with Nexgen probably close to 20 years ago. This is also a gentleman that only works 9 months out of the year, takes 3 months worth of vacations, And when he started with Nexgen, and Nexgen started their trading room in 1999, one of the things that he realized was going to be so important to his success was following rules, sticking to a plan, doing the same thing. And he created for himself, and I think this is pretty good, especially when you realize what your personal challenges are. He created what he called penalty box rules, guys. And all it was anytime he didn't follow his plan or broke his rules or created opinions, he'd pull himself out of the market because he knew that rules were important. So missing a good entry, right? Second guessing at not following the rules. Entering late because you don't trust the rules. Exiting for no reason. Moving stops to lock in profits. Exiting late, giving up profits. Trading against direction. Trading against areas. Trading against both. Getting kicked out. Stuff like that. That recognition that that following rules is exactly the goal. All right. All right, Todd, you ready for a little refinement? I'm going to bust your chops a little bit here. But I'm going to do it with love. And I want you to know that. So the entry was down here, right? Thanks, Lenny. The entry was with the smalls below the large in a downtrend. Your stream stopped? Okay, hold on. Let me reboot my stream and see if that helps. Jen breaks it all the time. Is that better? Lenny, that was good. Can you see me now, Todd? Is the video stopped playing? Is that what you're telling me? Yes, you are good. Okay, cool. So here's your entry. And what you're not doing... All right. I think we need to work on your arrows, if you will. Because you put exited fib, and there's no fibs here. And you put momentum and clear path right here, and there's no momentum and path. You're telling me your fib disappeared? There is a Fibonacci level there that is no longer present? Or are you trying to annotate this one where you exited at fibs? Okay. So this is not a fib. That's what I needed to know. This is what's called a 1-to-1. And this is actually a small swing 1-to-1, which means that on a 5-1 chart, it's insignificant. It's not anything to ever worry about. The only market that you worry about those on are the NASDAQ, and I wouldn't even say worry. No worries. It got there at 9:55 a.m. But it's okay. Let's talk about the first trade. Your first trade was void of momentum, right? Great exit, though. I don't know why you entered, but great exit. Second one looks like you just jumped in, 85.75, and out at something that could cause trouble. Brilliant. And that looks weird, but your entry was over here, and that was the perfect momentum just jump in trade. Perfect. Good job. This one down here is a little bit tougher. And you were in at 79, 75, which means you were probably in. Did you jump in down here when everything here set up? Like, did you wait for this point here to jump in? If so, I love it. You let everything agree and then go. But your smalls are up, your large are up, you're coming off a termination condition. Every indicator on your small chart is up. If you're going to take a shot, Todd, you took the best shot at it. Good job. Lower risk, not as odds favorable against the red background with the smalls below the large. And then you came back and got that one, the easy one. Just doubling up. Nice trading, Todd. But did you have momentum? Honestly, no, not at all. Your smalls are below the large. They're green and your background's red. You're hoping. You went next level because all of your triggers are above the 1-to-1 and then they rolled. This is more of a continuation. Bad top pulls back to the mid band and the large triggers never blink. It's a beautiful trade, but it doesn't have momentum. You did have room, and what you're doing, Todd, is you're saying this bad top pushed all the way back to the mid band. Large triggers didn't follow, so when everything agrees going up, it's more likely to go up than it is to just bounce down. It's an awesome trade. And then if you didn't get in until the small chart rolled, it's brilliant. It's better than you ever realized it is, which might mean you're starting to see stuff and hear stuff and retain stuff that just hasn't worked its way into becoming a part of your plan yet. Joel, odds favorable, leads the way, clear path. You find a way on the small chart to capitalize. Uh-oh. Joel, will you do me a favor? Will you comb the Nexgen study materials and tell me where you see strong triggers? There's no strong triggers. What you have is a termination condition, Joel. Your large are down. Your smalls are starting to roll up, but you have absolutely no momentum to support this trade on the large chart. All you have going for you is a termination condition. Your large chart is odds favorable momentum down. And you're jumping in, and it worked. Joel, this is left field compared to what you've been showing me for the last couple rounds. No momentum, hoping a termination condition holds, and really not even letting your small chart support it. Little bit of hope on that one. And then here, when it rolls down, everything down, now your small chart supports it, and that's effortless. Odds favorable up, small chart supports it. That's effortless. What do you mean the small chart on the big chart? Or the big chart? All right, so we're just going to use arrows. You did have a termination, without a doubt. Large triggers are down. Small triggers are up. You have a termination. That's cool, right? This is an area that could stop the market. Small triggers are way below the large through any termination conditions. Large triggers are down. Trend is down. You're taking a shot hoping the termination condition breaks. I don't disagree with it. But I've been watching you develop a plan. And your plan has been, when everything says down, go down with it. When you're coming off a termination and everything says down and the small chart supports it, go down with it. When everything says up and the momentum is there, find a way on the small chart supports it. When everything says down, find a way, right? So Joel, this is your one-off. Maybe it's a trade that you're working on. but it's an outlier in consistency, right? It's the one trade that doesn't look like the rest of them that are bringing you easy money. So when you show me a trade like this, ladies and gentlemen, and this is the one that got me. When you show me a trade like this and you use strong triggers with momentum, Joel, I either think you're reading your charts incorrectly or you're annotating them with what you wish was happening, or you're just phoning it in. You're just saying, well, this is what most of them are, so I'll just write it on every chart. And I don't know which one it is, and you don't have to disclose which one it is, but that annotation is not that look, right? And that annotation is not that look. Okay, large chart leads the way. So because the large chart leads the way, you have strong triggers. No. There's got to be honesty in annotation, Joel. Why? Because annotation is you saying that my rules are met. Not trying to beat you up here, but what you should have put was large chart pivot stop out. And that's your termination. Smalls rolling up. Doesn't that describe what's happening? Small chart termination. Small triggers are rolling up. Took a shot against small chart momentum at large chart term with reversal bar. Which is repeatable? Strong triggers and momentum? Not true. Large chart pivot stop out, termination, small triggers rolling up, showing change. Took a shot against it. Because what happens, Joel, is when you say I took a shot against the small chart because of the large chart, your management hat's on, man. You say something like, well, if it comes back below these large triggers, maybe I don't want it, and you lose less. But the idea of annotation is to be able to make it repeatable. So I'm a huge fan of honesty. Be honest with yourself. How many times do people post checklists on their charts and it doesn't match up at all? But when everything says up, you go up and you get it. Strong triggers with momentum and room to targets. Strong triggers with momentum and room to targets. Strong triggers with momentum and room to targets. Do you copy paste? Triggers rolling from nowhere. Strong trigger, momentum, room to targets. No? Just curious. Some people do. Some people do copy paste. That's why I ask. I love it. I love 7 out of 80. Actually, I love all your trades. Because the reasoning for this one was perfect. I just want it to be repeatable. If you write a plan, right? Why didn't you go long here with weak triggers that a termination condition? What's the difference? Over here, you could have got in with the reversal bar and not fought anything. Do you see the difference? And this is another reason I'm like, well, this may not be a part of your plan. That's a perfect termination, and that doesn't fight anything. That's a perfect termination condition, but it does fight. So, good stuff, man. Good stuff. And I'm pointing this out, Joel, because you are so far ahead and in the refinement process. I think it's important that you hyperanalyze everything you're doing. I don't know if you've gone live yet, but I know that that's on your mind. So consistency is key, right? Consistency is key. Gary says, when rule number 2 says no trades, I'll draw a zone and wait for it to break out. Right on. It's a 34.5 though. There might have been opportunities somewhere in there with all that momentum and clear path. But I'll do that too, Gary. When rule number 2 is keeping me out of trades, it's easy to define where the market has to break. Miss Jen, termination, triggers roll, straight into a term, pull back, rule 2 not met, large short on term. Right on, Joel. You know I know that, right? And you know that's why we focused on one of your pictures for the most time? Being held accountable, guys. It sucks, but it's great. It sucks, but it's great. John Novak does it to me. It aggravates me. Aggravates the hell out of me. So sorry if that aggravated you. Jen, I love it. You could trade into a termination, right? But you know you don't have to. I could take this trade hoping it works, but I don't have to. And it did work, Jen. Those sons of... It did work. That's okay. It might work again. Gotta follow rules. Amen. Gotta follow rules. Gotta do the same thing over and over. Same entry, same exits. Caught that one, Pete? Because it was into a termination condition. Of course you did. Pete's going to be the reason my gray hair falls out. Not really. Not really. I don't worry about any of you guys. Some of you are finding your way. Some of you have found your way. Some of you are trying to figure out what your way is. There's nothing wrong with anything anyone's doing. I love Simulator. I'm such a big fan of Simulator. I can make a million mistakes in Simulator, and I can get feedback on every one of them. I can annotate every one of them. I could go back and look at every one of them. And that's what you guys have the ability to do. But you don't have to look at your own charts and try to figure out what happened. I'll look at your charts too, and I'll help you figure out what happened. I was going through stuff, and I found this one. Typical trades Nexgen users take. Everything that's available to you, except Pete's trading into termination condition trading. It all starts with a termination condition holding, guys. That is the highest chance of success. I don't care what kind of trade you're taking. When it comes from a strong top or bottom, it's pretty solid. The first trade requires market flow, and there was a white bar breakout trade that John Novak used to teach, and that'll get you right at the fib. It's aggressive. And then you typically get an HVA trade. That's a little closer to the fib. And then you typically find a Nexgen momentum trade, which is like your first shot of hoping that the next fib breaks. And then you find those trend trades that are amazing. And then there's Ron's just jump the heck in trade. And then when you get to the next fib, you stop trading and wait to see if it's going to hold or break, guys. There's so many ways to use this software. You just have to figure out which way is easiest for you. Some of you are going to be trend traders. Some of you are going to be momentum traders. Some of you are going to find a way to be counter trend traders. As long as you have a plan, as long as you have rules, as long as you have something that says, you know what, with this look, this is my entry, and as long as my rules are met, I'm obligated to take this entry. That's it. Pete said the same thing right here. This is my look. This is my entry. I'm obligated to take it because it fits my plan. There's a saying about opinions. I don't remember what it are. Something to do with they both stink. Oh, yeah, Todd. Sorry. There you go. Doesn't have rules for any of them. It's just kind of a, these are all the different things that show up in this room. Momentum and path. Come on, pull back. Do you guys see it? Odds favorable momentum. Nothing in the way. There is one area inside of triggers, and I'm just hoping that small crowd shows up to fight, guys. My rules are met for a high probability trend trade. DeLuca, do you see it? Strong triggers have not reached an area. Triggers are below the previous area. I'm calling my shot before I ever get the reversal bar. Area inside of triggers. That's my high probability trend trade look. This would be my pre-trade picture. If I get filled, I would probably take another trade. Guys, if we get filled on this one, we're going to run it like the KISS plan. We're going to put our stop where the market shouldn't go, which means that if we get filled on this particular trade, our stop goes right at about 06. So we'll have 8 ticks of risk on it. So there was our reversal bar. The market, whoops, dagnabbit. The market should retrace, typically retraces somewhere from the bottom to the top of the triggers, not my entry. I have to find the area inside of triggers. There is one line. I'm going to be 2 ticks below that line because of this momentum. And that's it. And if this works out the way a high probability trend trade typically works out, this bar should look like this bar with a tail. So now we're just waiting, guys. High probability trend trade rules met. I'm not telling anybody to trade. I'm not telling anybody to load an order. I'm not telling anybody this is what you have to do. My rules say this is my trade. 2 ticks below a mid band inside of triggers with momentum and path. And I'm done. I'm not in control of anything else. If I get my entry, then my stop will be 4 to 5 ticks beyond the triggers. That's what the KISS plan says. I'm powerless right now, guys. Powerless. I can't control whether or not I get an entry. I can't control whether the trade wins if I do get an entry. All I can do is follow my plan. That's the only thing I'll ever be in control of. Are there any questions on why the limit order is where it's at? Are there any questions about what it is on the large chart that made me look for an entry on the small chart? Here's a good in the moment on why we use the refinement chart. Because inside of this bar on the large chart, nothing's changing. It's still down. It's still clear path. All of these bars have printed on the small chart. That's why we use that refinement process. Fun stuff, right? If only. If only. Next fib is until below 70. I've got room to make my $300 if it does hit. Aaron, does it make sense? Bejoy, does it make sense? Todd, does it make sense? Marky Mark snuck in here. Awesome, guys. This is it. Nosebleed, does it make sense? These little fluctuations in the bar, that's what freaks people out. They're like, oh no, it's going without me. You know, Todd, when I was learning to play baseball, I focused on baseball. I see you, Marky Mark. When I was learning to bake a cake, I didn't try to bake a pie too at the same time. There we go. We're in where the market is most likely to continue, guys. Our stop is 1, 2, 3, 4, 5 ticks above the trigger lines where the market shouldn't go. If I get a reversal bar, my new stop will be 2 ticks above that reversal bar. But you guys may notice that if I get a reversal bar, that's also going to be my $100 profit. So let's see what happens, guys. Let's see if we get it. Momentum and path. Pull back to the area inside of triggers. Stop where the market shouldn't go. It's okay, Todd. Watching the markets is exciting. It really is. There we go. Now we can see them both. Nothing but if then. If I get this, then I get that. If it does this, then I'll do that. If I see this, then I'll move that. Here's a pretty good... Thanks. And here's... I was going to go even further, Joel. Look at where that stop is. Ask yourself, is that where you would want to enter a short trade on the wrong side of everything? So Joel, here's the stop placement. It doesn't pertain to yours because you don't have synthetics. This box right here from the top of the triggers to the bottom of the triggers, it shows where that retracement is most likely to go. Which means I don't panic if these bars come up to the top of those triggers. Once I get to the wrong side of the triggers, I don't know if the market's going to go down. I don't know if it's going to go down from 1-to-1s or Fibonacci resistance or Fibonacci resistance. I don't know if it's going to go to the large sharp midband, which appears to be missing, which is weird. Let's get that large sharp midband. There it goes. So my stop is literally where the market should not go. It should not go past all of these trigger lines. It should not go 4 to 5 ticks above. So if I get a reversal bar, KISS plan, if I get a reversal bar, I'll move my stop 2 ticks above that reversal bar. Because that means that the market is going down with momentum, that the market is going down with a clear path, that the market is going down from the area inside of triggers. And guys, look at that entry. Freaking sniper. And now we're just waiting for momentum, hopefully, to do its thing. And I'm pretty much powerless at this point. It's either going to go or it's not. I'll never know what it's going to be. Boaz, everything says up, 50-50 trade, perfect pullback to the areas inside of triggers, and you just didn't trust it. And that's a quick profit and then a little money. Nice job. Not sure about the really fast profit. Perfect entry. No reason to believe that market wasn't going to stop until somewhere up here with all that momentum and path. Great trade, Boaz. Man, they're making you sweat, aren't they? Yeah, that first one got out of there quick. They are making you sweat. Anyone ever watch the fluctuations on the small chart, just panic and say, to hell with it, I'm getting out. It's taking too long. Yeah, Steve, we're going to do that in just a minute. I'm going to take another break here in a second. And then I'm going to pull TradingView over and we'll talk about some of that stuff. Whoops. And what I can do today, one of the things I've been working on is all these examples of those trading view trades. So let me drop that in the room for you guys. And we're going to go through a lot of these and look at them and do that. That's going to be my last little bit of the day. Steve, are you starting to work on them? And we'll go through the rules for them and everything as well. And I think what I'm going to do is I'm probably going to trade my PowerPoint. Or, oh, look at this. Are they going now? Is this the one, guys? Is this the breakout? I don't know. Come on, reversal bar. I want to reduce risk. Come on, reversal bar. I want to reduce risk. Guys, it's okay to do the down dance, right? I'm in a short trade. Do the down dance. Wiggle a little. Some of you have already jumped out of the trade. Some of you have already said, you know what? This is way too scary. I'm done. If you're brand new, there's nothing wrong, guys. I'm on simulator. Who cares what happens? I'm learning. I'm learning how to enter trades. I'm learning how to move stops. Guys, I'm learning how to accept losses. That's what simulator's for. That's exactly what simulator's for, is to go through all of those things that can create emotion and learn how to accept that emotion as a part of trading and not let it be detrimental to what you're doing. That's pretty normal volume, I think, Boaz, for crude oil. It's usually between like 67 and 75. Well, I don't care if I lose, but it's got to be the right losers, right? It's got to be the correct losers. Guys, we're at the top of the retracement zone. This is where I'm thinking, okay, if it doesn't start going down here, this may not be one of those winners that I was hoping for. I'm still where the market is most likely to retrace. I'm still near where the market is most likely to bounce. We'll just see what happens. We will see what happens. Yeah, I learned from losers too. I like to learn how to avoid them. I like to feel like I can start to avoid them. I can understand why they lost. And guys, just looking at this Renko chart, I've got all the momentum. My path is clear. Price just pulled to yellow 1-to-1s on the large chart with all the triggers below. That pretty much is a termination condition in itself, isn't it? Says no long trades. That makes me feel better. Won't the divergence on the small chart push it all the way up? Push it all the way up to where? Joel? Why would it? So let's do this. I want you to see something. This is odds favorable momentum on a large, big, strong, slow-moving chart. This is one loss of momentum on a tiny little chart. Which do you suppose is stronger? That's why, Joel, it takes 3 divergences to get me nervous with this look. It may push it up here, right? It's pushing it back to that 1-to-1. But every advantage is down on the large chart. I could find a million reasons all the time. Oh no, this looks like it's hitching. I should exit my trade. My small trigger's rolled up on the small chart. I should exit my trade. Why? Look at the large chart. And let me do it this way. This is an old John Novak trick. Let's get rid of that. Let's get rid of that. Let's get rid of that. In just the grand scheme of things, is there anything about this large chart that says it's not going down? Nothing, right? What does that mean? That means that I have an advantage. I have an edge. Look where the market retraced to before that first bounce, right to the top of those synthetic triggers. I'd love to see it go down from here. I'd love to take a winner in front of all of you guys. But the reality is, I might not. I might take a loser. I don't care. My patterns are built. And remember, it's this chart that leads the way. It's that large chart that makes me even look for an entry. And it's not looking good for me, guys. Boom, there we go. Where the market should not go. It happens. So your job is to do this. Your job is to say my rules were met. I took the trade. I exited in the right spot. This is an acceptable loser. This is a cost of doing business. What's the lesson, Todd? Do you have strong triggers? Up. And let's go this way. Todd, I want you to answer these questions for me, if you will. So check it out. What direction is the trend, everybody? This is your checklist as you go through. Trend is up or down? What do you guys think? What color's the background? It's up. Okay. Do I have strong triggers up? Yes. Do I have a clear path? And that's where we get you, Todd. Price reached Fibonacci resistance. My triggers haven't broken. So Todd, this is a textbook termination condition. This is exactly what we talk ourselves through. Price reaches resistance. Where are my triggers? Small and large remain below resistance. No trades into resistance. Does that make sense? Rule number 2 is not met. What else do we see? No long trades. 3 divergence from same area. What bars are above resistance? And so Todd, when you say bars are above resistance, where do you see that? Show me a picture. I need to see what you're looking at, because I don't have any bars above this resistance. And I don't have any rules that say bars get above the area. Remember, my trigger lines tell the story. And until my trigger lines get above this red line, I'm not going to look for a long. Will you show me a picture of your chart? Does that make sense, everybody? Once price reaches the area, once price reaches resistance, guys, we're done with price. Price doesn't mean anything anymore. The trigger lines will tell the story, 100%. And if the trigger lines remain below resistance, resistance is a termination condition. Joel, I would take that loser 1,000 times with you. Odds favorable, clear path, perfect entry. Just didn't work out. That was your problem in the beginning. Lonnie, that's pretty normal. And Todd, that's pretty normal. I had a gentleman, he would come in And he would look at this large chart and he would say, but Mark, they broke resistance. Does that make sense, everybody? Price got above the resistance line, guys. That thing's broken. Totally normal. So Todd, you have a different look, don't you? You have a much different look than I have. Were you looking at my chart at all? You and I have different looks, my friend. On my chart, you see that big ugly red line? That's what I'm looking at. So let's do the read on your chart, because your chart's a different story. Get up here. So on your chart, Todd, I like this. Small triggers have absolutely smashed through the area. It could be a couple different reasons. Large triggers are below. This is what we call a 50-50 look. When the smalls are above resistance, but large below, 50-50 look, with odds favorable momentum, potential to break. Does that make sense? And Todd, we could have opened, I could have cleaned out. So I want to show you something cool when you go back to advantages. Whoops. Bum, 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 bum. I'm going to put this at the bottom. A trade is momentum, a clear path, and an entry area. If this is only the potential to break, this is actually the second trade that's on the plan. If it's only the potential to break, it's not a clear path. Does that make sense? So what it does is it kind of keeps you focused on momentum, and it keeps you focused on the entry area. Divergence is a loss of momentum. So that first divergence means that all you have left is momentum. The second divergence kind of means all you have left. Get on there. It's not working. I don't know. There we go. Is maybe And then I think a third divergence actually printed. Where is mine? It did, and it pushed it lower. And now it looks like it's heading back up. They're great for upset tummies, absolutely. So Todd, your picture compared to my picture is you had the potential to break, but you had a lot of loss of momentum. And that's what's creating that dance. This is literally that fight between buyers and sellers. And I think that's why the market's struggling to get up through there. Why did you stop? Why did you get out of your trade? So Todd, different things that could change what we see. How many days back are you? Oh, right on. No worries. Right click on your large chart and go to data series. How many days back does your chart show? Is it 10 days back? Cool. So that's the difference. So watch this. If I change mine to 10 and hit apply, because what happened is your charts are taking twice the information mine are to create fibs. Let's see what happens at 10 days back. Still calculating right now. I did get a divergence high when I did that. Other things that can change it, being in different time zones, because we have different midnights, different beginning points. Not cleaning out your data every day could affect it. I still have a big fib there though. Oh, you know what? Because I have to make this one 10 days as well. So we'll see what it looks. Yeah, I am too. I'm Eastern as well. But our days back were different, which means that our software was calculating different. I cleaned out all of my tick data this morning. I do every morning. If you're not doing that, that could be different. I may have a different data. Well, I was doing 5 because when the tariffs first started, there was so much tick data in the S&P that it just loaded. 10 is standard. Mine's at 10 now. I'll keep it at 10. But sometimes you just have to accept that our charts are going to look different. Um, and sometimes they do for whatever reason. I pull indicators on and off of mine all day long. I change my stuff. I teach lessons with it. So always trade your charts is one of the big things. Always trade your charts. Every morning, Lonnie. Every morning. Where did he put it? So part of my morning routine, I'm going to give a fish, teach to fish. Every morning, I go to Documents, NinjaTrader 8 database. And I delete cache. And I delete tick. Every morning. That's the first thing I do. So I'm going to give you guys all these pictures. The second thing I do is I go back to NinjaTrader temp. No, you cannot. That's my cache. Delete everything in there, 100%. And then finally, I go to Workspaces. And I'll delete recovery. So this is my morning routine, guys. Every morning before I open NinjaTrader, I go through all of this. And it just sets me up with fresh data for the day. That's all. I also sync my clock every morning just to make sure that it's all tuned up and working well. And that's just part of my daily practices, guys. I do that. I open NinjaTrader as NinjaTrader is opening. I go and check news. Odds favorable directly into a term. Tried to jump in. It failed. After the failure, on the way down, you caught it. Nicely done. And then you tried to sell momentum on the wrong side. Enter. I'm not sure why it did that either. Nice trading, Pete. Joel, why are you changing your charts? Straight into a term. Like it. I like that look, though. Kind of Christmassy. Good stuff. All right, guys, I'm going to take a couple minutes. You can watch this. When I come back, we're going to go through some trading view stuff. We'll talk about some basics if you have any questions. We'll look at some of the trades on that spreadsheet. Okay. So go stretch your legs. I'll be back in a few, guys. right, guys, let's finish strong. Andy, man, the trading view, one I have a problem with because the price is going the proper direction, but I'm losing money anyway, albeit sim money, but I'm practicing. So let's take a look at your chart real quick. You've taken a long position. So Andy, one of the things is it's hard to read this minute chart. You're in a long position over here, and it looks like you got in at a mid band, and then the next bar is down. And I can't see what's going on here, but here it goes up. So you say that the price is going the proper direction, but you're losing money anyway. So would you say the price is going the proper direction here? I want to make sure that we can try to fix this. Because I see a down bar. But you're not showing me... get small again. This is showing that the trade is $150 against you. And there it is right there. That's the $150 against you. And that's what that is right here. This is your entry. 58.42, 58.42. So I'm not sure when you entered the market or why it's way down here. Looks like it's up there. Andy, I'm not sure. What does the D mean at the top right there? I don't have that on my chart. Delayed. So you are on delayed data, Andy. There we go. Problem solved. You are on delayed data over here, and it doesn't look like you're on it over here. Okay, did you activate it? I don't know. Let's do this real quick. Okay, so you purchased it. Set data updates to real-time mode. So make sure that your chart settings are configured to use real-time data. Boom, boom, boom. So here's my settings tab. Symbol, status line, trading, buy, sell, alerts, events, color bars, data modification, electronic trading hours. I'm not 100% sure. You say it works on the NASDAQ though? Did you rebuild your NASDAQ charts after you got your data? So maybe try rebuilding your ES charts and see if the new data picks up. Remember, I'm not a trading view expert. One thing that I do know, guys, when you're looking at your indicators, if you see that little purple thing, I would try rebuilding, Andy. That would be my first go-to. That little purple thing means that there's an update available on your indicators. So you could go in and you could do manage layouts and maybe put ES futures copy, which is going to make it look exactly the same, and change it. So let me make sure this is the right page. Yep, okay. So you're going to go like this, Andy. You're going to click on whichever workspace you need. So if we were doing the ES, you'd do View Chart, and it pops it up in the browser version. And then once it pops it up in the browser version, I'm going to click Copy. And when I click Copy, well, I got to sign in. Once you click Copy, it's going to put it into your templates. So you can come over to the desktop app and just drop that ES futures copy in there, that NASDAQ futures copy, that crude oil copy, and it'll give you the tab. So like I could add it. I could click this, new tab, create new layout. From create new layout, I'm going to drop down here and I'll make this an S&P. And there it is. And now I've got the S&P. It's hitting copy that makes it go in there. That drops it into your template, into your defaults. All right, guys, I'm going to open up this real quick. And we're going to talk about the rules for the 3 trades that are in the plan. For all new students like you, you're 12 days in. Oh, no worries. Guys, there's the TV trade. Oh, sorry, that's the journal. That is that's the spreadsheet again. Here is the very basic trading view plan. It's got checklists on there for the 3 trades that I'm about to introduce you to, guys. The first one is the high volume area trade. This is the trade that's going to help you take advantage of tops and bottoms. And it starts with price reaching. Very nice, Todd. That's about normal, though. I mean, that's perfect. Flounder, learn some lessons, and then start rebuilding. I think that's awesome. Guys, your high volume area trades. This is your checklist. Zone reached on the 15-minute. Small chart, triggers roll, buy or sell a pullback to the HVA line. Looks like this. Zone reached, area reached, guys. Some sort of termination condition, whether it is one-to-ones, whether it's a zone, maybe it's a divergence low, hitting something that says absolutely no more longs, absolutely no more shorts. That's the first step. Steve, are you with me here? Because we're going to go through them. The second step is your small triggers on the fast chart, on your 1-minute chart, those market flow triggers, guys. They have to get below the large for a short. They have to get above the large for a long. So your small triggers for a short trade have to be below. So no matter how much you love this termination condition, until your small chart shows change, you're waiting. And then the final rule is when they roll, sell a pullback to the magenta line. Or if it's a long trade, sell a pullback to the green line. Guys, this is the HVA trade. And it really, and we'll go through and we'll look at a lot of them. So let's do that. Let's do journal trades. And not all of these are both charts. Triggers roll. And your zone was up here. Triggers finally roll, sell the pink line. That's what your entry is going to look like. Zone holds, Triggers roll, smalls get below, sell the pink line. It's the same look every time. See if we can get some two charts. Nope. Zone holds, triggers roll, sell the HVA. Over and over, guys. Rinse and repeat. Hopefully I've got some two chart looks here. Zone holds, buy the pullback to the HVA. Does that make sense, everybody? It's really not a difficult concept. I don't think. Let's see if something happened on the S&P. The 15-minute chart, Lonnie, is where you're letting the zone hold. So for example, this would be rule number 1 for an HVA trade. When price came up and hit that zone. When price came up and hit this divergence high. So that was 2 p.m. yesterday. Let's scroll back to 2 p.m. yesterday when it hit that divergence high. It's a little harder to scroll on this one. This is one of the challenges with back testing on TradingView is the market flow lines won't be that far back on historical. So let's make this circle a little smaller. Do you see the termination condition, Lonnie, Steve, everybody going to TradingView? Do you see how price reached a divergence high? All the triggers are below, no more long trades, right? That's all happening over here. What you're waiting for, there's a peak right there. That's where it happened. Small triggers get below. If there's an HVA line here, and again, market flow doesn't go back that far historically, guys, you're short for this trade, assuming there was an HVA line. So I can make this smaller. Arg. Would be right about there. So first it's a termination, then the triggers roll, and then let's get fictitious here. I'm going to sell a pullback to that magenta line. That's your HVA trade, but it all starts on the large chart. It starts on the 15-minute. Let the 15-minute hit a zone. When you come up a little further, 4 p.m., it spikes up. There's where you hit the zone. Didn't give an opportunity. You would have never had a pullback after the triggers rolled. 7:15 p.m. Market pulls up, triggers roll. Doesn't look like there was a pullback, but that's your look. And it's the same every trade. First it hits a zone, and then the small chart shows change. So right now, there's no zones. There would be absolutely no potential HVA trades. Does that make sense? What do you have? You have triggers and path. Which means I'm hoping for a trend trade right now. My large triggers are up. My path is clear. Everything says this market is going up with strength. There's a little better read. I'm hoping at this point for a pullback back here to the mid band to take a trend trade to look for an opportunity. Zone reached. Triggers roll. There's your pullback right there, guys. And then this wasn't just one. It did it again, and it did it again. This one gave you 3 opportunities for shorts because the large chart held and the small chart showed change. Any questions about the HVA? First, it's a termination. Then the triggers roll. This one missed me by 2 ticks and then dropped. That's your HVA trade. And they're all on this. All these are on that spreadsheet. And then next, you're going to have just the basic trend trade. Buying or selling at the HVA line, Steve. That's it. That's your area for entry. HVA line. Of course they do. They're momentum indicators, Lonnie. The same way they're momentum indicators on the 1 minute. The same way they're momentum indicators on a range chart. So when they're down and strong, that's a great sign. And when they're down and strong on the small chart, that's a great sign. And when the path is clear on both, I'm going to look for a pullback to a midband. No, Paul, they're not equivalent because that means that they were fibs. They're supply and demand areas. They're areas where historically the market has reversed. It's the same concept, but I hesitate to say equivalent. They give you an indication of where highs and lows could happen. They give you an indication where there's been price changes before. Does that make sense? Cool. I respect them very similar to how I would a fib. And guys, this is your trend trade with odds favorable momentum, with nothing in the way. When the market comes back to a midband, the entry rules say take a close on the correct side of the triggers. Don't fight the triggers. So Lonnie, this goes back to the idea that we don't want to fight trigger lines. And on a 1 minute, these fast triggers, they're hard to beat. It's hard to get the better of them. And then finally, there's the momentum trade, guys. When everything says up with strength, buy a little snapback. Buy a little snapback at a 1-to-1. Buy a little snapback at an HVA line. Buy a little snapback at a mid-band. That's your momentum trade with momentum on both. And that's it. It's only 3 trades. It's nothing new. It's all the same stuff. This is the NASDAQ here. So Steve, what we're looking for is a time when it's pulled back to the mid-band. And we got to close on the correct side. And to be honest with you, in that big, strong trending market, it doesn't look like it has. That's 9:30 a.m., but it went all the way through. So in all of these looks, not one trend trade, Steve, but let's see what did happen. So strong triggers and nothing in the way. Maybe not a lot of opportunities. Here's one right here, Steve. Odds favorable momentum, break above a zone, buy the zone. Odds favorable momentum, break above the HVA, buy the HVA. Odds favorable momentum, buy the HVA. That's your momentum trade, Steve. So it never made it back to a trend trade. But if you let it break the zone with momentum and pull back, break the HVAs with momentum and pull back, break up, pull back with momentum, you can find opportunities to continually trade with it. Gary, I don't know, man. It looks like TradingView has a 30-day trail. They do have a month option. There you go, Gary. So if you do month to month, it's $56.49 for the premium. You can get it free for 30 days. Click the month switch. I'm not sure what that is, Jim A. Oh, up here. Annually, monthly. There you go. Thanks, Jim. There you go, Gary. Put it on monthly, not annually. I think that's what it was. Thanks, Jim H. Looking out for us. I suppose so, yeah. So let's look at some trend trades, Steve. And this was just what the entry is going to look like. Pull back to the mid band. Don't go, and then you get your close. See how the fast triggers roll, guys? First they're outside of them, then they weaken them, and then it goes. And this is one of the great things about the 1 minute is you'll know where your areas are, but you can get that little bit of patience, not fighting those triggers. Trend trade short, and just there it is again. There's your mid band. There's your close below, and then the market heads down. And what I find is that I have less risk. And then there's the two together. 15-minute chart has all the momentum. There's your pullback. There's your close. Off it goes. Oh, there you go, Hamid. Thanks for that. Put it on monthly. Use the free 30 days, and they send you a note for 60% off. That's awesome. Thank you for sharing that. That's good to know. Do you see it, Steve Diego? There's your trend trade, brother. And everybody. So the idea is you've got to just kind of burn these into your brain a little bit the same way you did the other stuff. I love TradingView. I'm such a fan. There we go again. I mean, you don't have to do anything. It's America. But for me personally, I'd rather wait for the close. Let me see if I can make this. I want you guys to see something. I'm just going to pull up my 1 minute. Oh, that's my 15. Dang it. I'll just make the 1 minute big. So this is kind of the same thing. As long as these are up and strong, guys, the market goes up. When they roll, the market goes down. That's one of the great things about a 1 minute chart versus a 5-1. I love a 5-1, guys. I love a 13-2 on the NASDAQ. This 1 minute chart forces, it forces patience. You know where your spot is before you ever get there. I think I took this picture this morning. Let me see if I can find it. Well, there's the NASDAQ this morning, Steve. Everything says up. I waited for the close on the correct side of the small triggers at the mid-band. Yeah, for sure. So if you look at this one, Hamid, you can see where my stop is below the reversal bar. There's my entry. And then I had my targets up at the next zone. Make it bigger for you, Steve. Price comes down, gets to the mid band, closes above. That's when I entered the market. 85.75 right there. See how buy two, 85.75? I waited for it to get above the small triggers again. 220 per contract on that one. It could have been less, but I gave it room. Because when you have odds favorable momentum on the large chart and a clear path on the large chart and the perfect entry here, I don't mind a little more risk. It just doesn't faze me. If it bounces, it bounces. And look what happens. So the first thing you can say is things are getting better instantly. Fast triggers are rolling up. My target was up here. I ended up splitting it and had one at the outer band and I had one at the zone. And honestly, I came and started teaching class. I don't know what happened. Let's go back and look. Boom, 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 boom. There was my entry. There was my first target. Good lesson here. Never said down. So there was my entry, Steve. Just kept dancing, kept dancing, kept dancing. Hit my first target. And then it looks like they got me on the second one, break even. Little stop run right there at the market open. And then it just launched up. But that was it. Trend trade. Trust the large chart. Hamid, I think the best one is Chart Prime. You're welcome, Steve. The one I'm running is Chart Prime. It's $67 a month. John Novak did extensive research on it. That was the best one he could find. There is one that is free. And I don't make recommendations. You know that. There is one that's free, the Algo Alpha. And John says, large chart, it's pretty solid. Small chart, he doesn't care for it as much. And I'm trusting John on the indicator stuff. If he says this is the one you need, that's the one I get. And he told me to get Chart Prime, so I got Chart Prime. Three divergences in the same price range. Small triggers are rolling, getting to the wrong side. Maybe a deeper push. Everything still says up. Here, let's see if it makes it to the mid band and gives us a trend trade. What do you say? Whether it's right or not, let's see if we can time out a trend trade entry if it comes back to the trend trade. Just for something to look at. You guys cool with that? Small triggers are down. They're pushing down. That momentum is down. We'll see if they get us down to the 266 area. And they may not. But all we're going to do is we're going to try and time out what it would look like if there were a rules-based entry. Did I miss any questions? I think I got them all. And remember, I'm not just clicking on the chart and putting a buy order in. They're very similar, Steve, but they're different. They're different calculations, but they're very similar. Hold on. Hold on. Let's do this. New chart. NASDAQ. I'm going to build a 1 minute on the NASDAQ real quick. Minute one. Boom. Okay. So we're going to try this. There's been so much up, I'm out of fibs, Steve. But there's NASDAQ, or there's Nexgen on NinjaTrader. There's TradingView. That's pretty darn similar, isn't it? Let me see where our last fib was. All right, so that was like right at 950. So let me back this up to around 950. And I think the zones recalculate though, which might make this a little more difficult. 82. Arg. So there's the fib. There's the bounce off of it, and there's your zone right there, Steve. It's about it's a few points off. Same look. But you actually have a zone in the same vicinity, which is pretty cool. Oh gosh. Gary, John's given it about 100 times. Post that same question in Traders Chat, and he'll probably show up and answer it. I don't have it. I just made him buy it for me. Cost of doing business with me. Or you can Google it, right? You could type in chart prime and follow the link, and that's the one that John uses. That's the one that I use. That was easy. Oh, they didn't get my mid band, did they? Dag nabbit. They didn't come back for us at the mid band, guys. It was close, but they didn't get there. What else do you guys want to talk about? Guys, I would encourage you, go through and start looking at these. And that's the PowerPoint, sorry. Go through and start looking at these on the spreadsheet. Just start building that familiarity. Start thinking about the words, what you need to enter a trade. Look at the trading plan. Look at those checklists. Start getting that in your brain. And then guys, next week, my hope next week is that as you begin going through and practicing and simulating, and of course you're welcome to do it right now, post pictures of what you're looking at. Post pictures of your trades. Post pictures of your trading view questions. We're going to run 2 classes, guys. We're going to run Nexgen in the morning, NinjaTrader, looking at all that. We're going to run TradingView in the afternoon, and I really think in the afternoon, we're probably going to spend more time looking at the live market, saying everything says up on the large chart, right? Small charts coming off of 1-to-1s, everything's rolled, triggers are rolling. To go with the large chart overall trend, my next potential buy area would be this HVA line because I'm getting odds favorable momentum. Everything says up. That's my next opportunity. We'll see if it comes to fruition. But we're going to do a lot of that, guys. We're going to do a lot of going through and saying, all right, what's the S&P say? The S&P says, man, we're trading directly into a zone. But with this uptrend, we should have been watching the S&P. There's your close on the correct side of the triggers at the mid band. And now the market is, in fact, going up with a large chart. Crude oil has broken above all of the zones. And we're just in a holding pattern because there's no rules met. I'm excited about doing this stuff, guys. I'm excited about getting in and talking about this. Typically, I enter on the close because what happens is you might get a bar that comes above and then back down, right, Lonnie? So this is kind of a good look. I want to draw this out a little bit and get rid of this. Let's turn this into a lesson. This is against smalls. This is weakened smalls. You guys know the concept, right? This is with smalls. So what does price do until you are with the fast triggers? Goes sideways. Do you guys see it? I think I want to go long. It's almost time to go long. That's the first one that closes on the correct side. And then that's basically the same thing when the small triggers roll. I love the patience. So large chart says up. We're pulling back to the mid band. And this is a weird look because look where those small triggers are. So let's see what happens. Large chart still says up. Small chart on the wrong side of the small triggers. Do you guys see it? Are you following me? So if you were thinking trend trade, you don't have rules met yet. Does that make sense? So what are we waiting for? I'm not... Steve, Chili Dog isn't my trade, brother. You feel free to come up with a plan, take pictures, share it with the classroom. I've got an HVA trade, a trend trade, and a momentum trade. Those are my trades, guys. Those are the trades I'm going to teach. Those are the trades Nexgen has built plans for. Just because you can do it with the software, I've got no obligation to teach it. I think it's a little harder on minute charts, Steve. The Renko bars really lend themselves to that Chili Dog style trade. I don't think that the minutes do. I don't really think that the minutes do. But the equivalent of a Chili Dog trade would be everything screaming in the direction of the trend. There's a good looking trend trade. And doing that little break and pull back. Little break and pull back. So I think that Nexgen style momentum trade is going to be really the closest thing that you get. Still waiting there. And look at that. They made it to the mid band, didn't they? And the small triggers are down. I don't know which chart to look at. You guys want ES or NASDAQ? Neither of them appear to be going back up. They're all going in the direction of the small triggers. So that's a good reason not to enter at a mid band. Rule number 3 is not met. And look at it going down, guys. When you switch to the 1 minute charts, you'll realize that you have to respect these triggers. And if you don't respect those triggers, you're going to get run over more often than you don't, guys.